DRD Gold reported a 27% increase in operating profit to 219.9 million rand, just about $18.8 million, and declared an interim dividend of 5 cents per share, or 0.41 US cents per share, for the 6 months of its financial year, which ended on the 31st of December.
We've done a lot of things to set the business up for a new phase, changes in the cost structure, production profile, and we saw some of those changes come through in the 6 months. So we generated some free cash, production was up 11%, costs were down, and we had a nice operating profit as well. So all in all, it was a quarter where things started coming together for us.
But consistent electricity supply remains a concern. While some operators in the mining sector have created their own power sources, others remain dependent on Eskom power to drive their operations.
So Eskom collapsing can have a profound impact on the economy as a whole. So we're hoping that with Mr. Ramaphosa now having assumed control, I would imagine that we'll see some rapid change there just to stabilize our utilities.
On an operational level, the gold miner is in an acquisitive mood.
We've also done the transaction with DRD Gold and DRD Stillwater, and we're really hoping that we can get our shareholders across the line to vote in favor of the transaction and then start implementing. And that's a big thing for us.
Another big issue for the mining sector generally is the dollar-rand exchange rate. Some miners spend a lot of time hedging against foreign currency fluctuations. Some get it right, others, like DRD, don't hedge.
From a cash flow perspective, in the near term, obviously it's having a negative impact because your margins shrink and we take full exposure. And our shareholders expect that from us. I think they like the volatility and the liquidity that follows it.
The currency moves are a double-edged sword.
The upside that we get from the political environment changing in climate, I think, will be very negative for the gold miners. The stronger rand certainly will impact their ability to earn revenue, and at this current rand gold price, I think many operations may already be unprofitable.
The gold sector is seen as one of the stalwarts in the South African economy, and with the changing fortunes, it's likely that they are going to feel a bit of downside initially, but they'll benefit in the long term. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.